My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. People want to make friends, just trying to make some money. My job is not just to entertain, but to educate, teach, and explain what is really one of the craziest markets I've ever seen. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Enough with this market's bizarre mood swings. Apple's great. Buy, buy, buy. PayPal's bad. Sell, sell, sell. Google's fantastic. Buy, buy, buy. Ooh, Facebook's horrendous. Sell, sell, sell. Amazon's terrific. Buy, buy, buy. All right, enough. Enough. Today's Dow plunged 518. S&P plummeting 2.4%. NASDAQ nosediving 3.74%. But then tomorrow's Amazon, and it was just great. So maybe those numbers reverse. Man, we got to calm down. We got to step away. This is not working. This is not what I want you to be doing. I can't get the market to take lithium. I can't. It won't take the medicine. I can't give it a whole pharmacy of antipsychotics, but I can help you understand. Lose the hate and anger. Be less emotional. See, the truth is simple. Some companies are doing well. Others are doing poorly. Forget the ETFs. Forget the S&P. Forget the NASDAQ. There are more companies doing poorly than we're used to, but many are doing well. And what you're seeing is maybe the most emotional market I have come across in 13 years. And it's not helping you to play that way. How do you handle these mood swings? Not the market, but how do you handle them? Well, first, you need to raise a little cash. You're going to get that chance tomorrow because Amazon gave you a great number. What is cash? That's the Wall Street equivalent of taking some Xanax. Just a 0.5 or 0.25. Nothing addictive. We have a big CNBC Investing Club meeting tomorrow, our second with our special guest, the heroic Lisa Su from AMD. That stock will most likely be up nicely tomorrow because of Amazon. And we'll explain, among many other things, how cash can defend against the market's bipolar behavior. That's why we raised some cash for the charitable trust today, even though I kind of liked what was happening in the market. We sold the very winning stock of Union Pacific. Why? Because the weekly railcar statistics, they come out, and they come out from Burlington, from Berkshire Hathaway. They've been not so hot of late. And you can't wait for a downgrade to happen in this market, because you'll get it. So we took some off of a good company. So we have cash for great companies that are getting thrown away. More importantly, though, when this market goes crazy, okay, cash is what you need so that you can handle the ups and downs and snap up some terrific discounts. Believe me, after this Amazon dazzler tonight, you're going to get a chance to reposition. I want you to take it. I want you to take it because of what happened today when you got hit by a nasty 4% anvil decline in the NASDAQ. And I don't want that happening to you. And, well, that does bring me to the proximate cause of that 4% rout, doesn't it? The herd of elephants in the room. The meta death that is the old Facebook. Honestly, let me just start by saying last night's quarter was not as horrible as people seem to think, but that doesn't matter, does it? I mean, every few years, Facebook hits not a speed bump, but a concrete retaining wall, making you feel like a crash test dummy if you own the stock. We've kept a small position in Facebook for the Travel Trust for years, mostly to keep an eye on it. And after today's 26% decline, well, guess what? I actually like what I see. Now listen to me here. That doesn't mean I said buy. No. Why? First, because Meta Facebook was indeed disappointing. It didn't have any user growth, unnerving because it doesn't take much to have user growth. In that sense, it was even worse than Netflix, which merely had a slowdown. Of course, that doesn't explain the full 26% decline. The real problem is that Meta Facebook's taking a huge hit on advertising. By the way, the CFO, David Wayner, he was very straight about this. There's no mystery to that part. Now, they also have to spend fortunes to develop the metaverse. Again, Wayner, no mystery. Something that they see as a huge priority. Otherwise, Zucker wouldn't have renamed the company. Now, see, like, renaming the company is not like renaming Everest NVIDIA. It's like a big deal, okay? But the real problem is advertising. Now that Apple's making some privacy changes that I think favor you, the user, which is kind of the way Apple works. It's like, hey, let's help our customer, not the app developers necessarily. Well, you got to wonder if the value proposition is still there for Facebook's advertisers. If they can't track your online behavior as well as they used to, maybe the targeted ads aren't worth as much. Weird, though, isn't it, given that Pinterest and Snap did so well tonight, as did Amazon and Google in advertising? It does seem to have a commonality to it. It's ABF, anybody but Facebook? Put it all together and you can justify selling the stock maybe down as much as 15%, but not 26%, which is how much it did fall. Why is down 26% too much, and yet it might not be over? Because Facebook has actual earnings. Right now, you're paying just 18 times for those actual earnings, well below the average stock in the S&P, and it's better than the average stock. This is a premier growth stock. Aha, you say, didn't you listen to the conference call, bozo? It's no longer a growth company, you fool. Didn't you hear Mark Zuckerberg when he was saying that TikTok's running the table against them? Only an idiot would stand by these clowns. What can I say? Maybe I'm an idiot. But I'm the idiot who bought Facebook in the teens and low 20s for my charitable trust when the company was written off because it was behind the curve on mobile. I'm the idiot who pounded the table again when it looked like they were losing to Snap. And then in 2018, I was the idiot that told you to hold your nose and buy it during the Cambridge Analytica scandal. Now it's at $237, and you've made a fortune if you listen to these recommendations, especially the first one. I make plenty of mistakes. I've heard endlessly about PayPal. Hey, you know what? I'll wear the PayPal. I'll wear the notepad. I'll wear the Post-it if it makes you feel better. But you know, sometimes there's stocks that can work. I'm not telling you to buy Meta Facebook tomorrow. Not yet. Because when you have an emotional market that's begging for lithium, the selling will not be like normal selling. It gets angry, it's chaotic, it's extra irrational. It won't necessarily be over in a day, despite Amazon doing well, because as we saw from the egregious action in PayPal, yes, these stocks have become show-me stories, which means show me the door. Right now, you have many shocked people who believe that Facebook's management has completely lost it. And Zuckerberg, he's been defeated by TikTok and the government and Apple. Hey, I don't know what, Joe Rogan, COVID strain to be named later. These institutional sellers have one desire today. They never wanted to hear again about this company. They don't even want to hear again about advertising, about online, about monthly average users, sell, streaming, sell, ad-supported, sell. I think they're going to be proven wrong. Today, there simply weren't enough buyers to accommodate all the sellers who wanted to get out of Meta. How is this possible? Well, I'll show you. I mean, imagine yourself in a trading room, okay, of any billion-dollar firm. You probably haven't been there. I've been to a lot of them. Here's what it's like. It's around 3 o'clock. The portfolio manager who owned, say, 2 million shares when they came in this morning and thought they were going to get an upside surprise has been able to sell about half of his position throughout the course of the day. The stock's at 237. It's been going down, 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 down. He walks into the trading room, and after about a half a minute of invective, he says, how much more do we have of this garbage, and how much have we sold? By the way, that's the PG family-friendly version. In response, the trader says, the stock's so heavy, we've only offloaded about 1 million shares. I don't want to kill it. The portfolio manager's furious, worried about his job, and says, kill it. I don't care. I don't care how low you sell the stock. Oh, what the hell? It's at 230. Sell it down at 230. Now, the trader, who normally would try to get the best price, understands that's no longer the goal. They just have to get the stock off the sheet so it's never seen again. So even though it's going down, 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 it went further down. So you have a cascade effect as this exact same conversation occurred all over Wall Street. These sellers, not you or me, will create the bottom in Meta Facebook with their fear and their loathing. Apologies to Hunter S. Thompson. Why then would I even think about buying it? Well, first, Meta Facebook has a war chest like almost no other. It bought back $19.18 billion worth of stock in the fourth quarter, certainly paying too much, but they've retired nearly $45 billion since last year, and they got another $38.79 billion authorized. That's not the sign of an ailing company facing with an existential crisis as far as I'm concerned. Second, the problems can be figured out as long as there's demand for Facebook and Instagram's advertising, and there is voracious demand still. Finally, when the selling storm stops, and again, you'll know because the manic dumping ends, well, people who are trying to sell it below where it's being bid for ends, then you're going to get it. You're going to get it. You're going to get a bottom. And the buy side will, at one day, maybe soon, be bigger than the sell side. And that's when I'm going to come out and tell you, listen, you can buy some. This whole sell-off is really about one thing, stopping TikTok from taking business while they build out the metaverse. Zuckerberg right now, this very minute, is coming up with ways to blunt and take away TikTok's business with Reels. The bounce will come when the selling dries up, probably very, very quickly. Bottom line, I say Meta Facebook will be a buy because eventually the sellers do get exhausted. The patient will be comatose, and this will be no different from the last 3 times I said to buy, and everyone laughed. We may not be there yet, but I think we're awful close. Let them ruin the stock one more time. That will be your chance. Judah in New York. Judah.
Hey, Jim, booyah. Shout out to my dad and his mobile fridge. I'm calling about a stock that you introduced me to. It makes real things, makes real money, trades at 35 times this year's earnings, under 27 times next year's earnings. I want to know what you think about Generac.
You know, that was all caught up in this California legislation for the giving people money when they want to be able to do solar. And I think the Generac is very good down here. I mean, this thing has been cut. This stock was at 524. It's now at 275. Did some of the electric grid get better? I mean, did anyone, look at the electric grid? It's bad. Generac's the answer if you have the money. I need to go to Doug in California. Doug.
Booyah, Jimmy Chill.
Yo. Chill ain't been chill lately, but I'll get back to it. What's going on?
We took up a position many years ago on a stock you recommended. We have a cost basis under $50, and I think this is a pigs get slaughtered situation. I need to know if I should sell or hold Lam Research.
Lam Research, the old novellist, Rick Hill, bought by the unbelievable Lam Research. And Tim Archer's doing a fantastic. I want you to take out your cost basis. The rest, I want you to play with the house of money. Take out your cost basis tomorrow. Lam Research stock is down hideously. It's the king of its field. Everyone's given up on the semis. Until when? Until they love the semis. This is one of the most emotional markets I have ever seen. You need to be dispassionate. You need to be calmer. You gotta stop. Because when it's like this, you gotta steel yourself. You gotta tie yourself to the mast. You gotta look for aberrant behavior, like people who are trying to sell Meta Facebook much lower than the people willing to buy it. That's how bottoms get formed, even if you hate it. Bad money tonight. Elf Beauty fell today after earnings. Cosmetic company doing what it needs to get in your portfolio. Let's check in with the CEO. He's a visionary. Speaking of visionaries, Qualcomm reported a blowout quarter last night. Nobody cared whatsoever. That'll change tomorrow. I've got the CEO. And I've been telling you to start finding real growth stocks with real earnings. Does Align Technology fit that mold? Let's talk to the company's top brass after earnings. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.